Good morning, everybody. Welcome to Daily Crypto News. It is Wednesday, August 2nd, 2023. Yesterday, if you guys remember, Richard Hart, he is the founder of HEX, Pulse and Pulse Chain, and he was sued by the SEC for allegedly soliciting unregistered securities and using the funds from said securities, unregistered securities, allegedly, to buy luxury goods. And as you would expect, the value of his tokens, especially HEX, have dropped significantly in the past 7 days. HEX's value dropped around 50%. And in the wake of all this, Uniswap banned HEX from trading on its DEX. Now, I know what you're thinking, of course. If somebody is getting sued by the SEC, exchanges want to distance themselves and protect their overall company, their exchange, their revenue. So why not just delist one token? That's where it becomes interesting, because Uniswap is supposed to be a DEX, a decentralized exchange that operates outside of the rules of any kind of centralized exchange or government or regulatory bodies or control. A DEX is supposed to be, just like Bitcoin, completely peer-to-peer and decentralized. Well, I guess we found out that Uniswap is not peer-to-peer, or actually decentralized, and now I think we really have to rethink what a DEX even is, what we call a DEX, and how is it classified, what are the rules of the DEX. What do you think about this? Do you think that a decentralized exchange should be able to delist tokens willy-nilly, or if they find that there might be a threat to their overall business, or they just don't want to expose their customers to maybe scam coins or rug pulls or just shit coins in general? Do you think that they should have some kind of protections even though they're decentralized? Or do you think that's the point of decentralization? Buyer beware. Let the market decide. Free market capitalism for everybody. Let me know. Bookings at todayinweb3.com. If you guys remember, over the weekend, Curve Finance suffered a hack and hackers made off with around $52 million in assets, including $7.19 million worth of CRV tokens worth around $4.5 million. After that hack, obviously, Curve's price plummeted and went to 2-month lows of around 59 cents. And the thing is, if the price of CRV hit around 37.2 cents, then the founder's positions in all the loans that he's been collateralizing with Curve tokens would have been wiped out. Security firms are floating around proposals to prevent future loans against the $158 million worth of Curve tokens on AAVE, making sure that we don't have issues. They're recommending setting the CRV to loan-to-value ratio to 0 to help impede additional borrowing against existing CRV collateral due to recent decreases in Curve liquidity. LTV, or loan-to-value ratio, is measured by comparing the amount of collateral assets to the loan's sizes. The higher the down payment, the lower the LTV ratio. And a 0 LTV effectively means loans cannot be taken. Well, a lot of this risk is in the founder's hands because the founder has lots of loans, as we heard yesterday, collateralized with Curve tokens. And actors in the space such as Justin Sun is coming in to buy up the Curve tokens from the founder. So far, he sold around 50 million Curve tokens for about 40 cents per token, and he earned around $20 million from that. Binance's founder and CEO, CZ, came close to closing down Binance.US earlier this year in order to protect the wider company, and this was reported from The Information. Apparently, the board of directors of Binance US voted on whether to liquidate the company, but could not come to a unanimous decision, with the Binance US CEO Brian Schroeder blocking the decision. CZ, he serves as the chair of Binance US board of directors. And remember, I was saying that I don't understand why Binance US is even still open. The only thing I can think of is that they're hoping that the SEC and the Coinbase lawsuit goes in Coinbase's favor, opening up more clarity to the regulations and the rules of the road, opening up the banks and opening up the ability for U.S. customers to use Binance US as normal. And they're basically using this as an investment period for a hopefully prosperous future. But during the whole debacle with the SEC and just looking at what's happening with Binance in general and the regulation and the markets and where Binance has been putting their international arms and trying to create a foothold, I was surprised that they didn't pull out. But even if they did pull out, would it really matter? The reason why I'm asking this is because Binance users traded around $90 billion of assets in a single month in China. And why is that surprising? Because crypto trading has been illegal in China since 2021. Of all of the transactions made on Binance, China is still the biggest market by far, accounting for 20% of the volume worldwide. When Binance was asked about this, like, hey, how are you still getting $90 billion in single month trading volumes in China? A spokesperson of Binance said that Binance.com's website is blocked in China and it's not accessible to China-based users. Well, that's the thing, is remember what the CFTC is alleging, that Binance knows that people can access their site via VPN and encourages them to do so, and that's what happened in the United States. Binance.com was blocked in the United States, and they were still getting a lot of US-based customers, because basically we just put on our VPN, put our location somewhere else, and use Binance as normal. The CFTC said that Binance is an illegal exchange and has a total sham compliance program. The SEC also sued Binance and CZ, saying that Binance artificially inflated trading volumes, diverted customer funds, and failed to restrict U.S. customers from its platform and misled investors about market surveillance controls. Basically, Binance exists, people can use it. China is the biggest market by far, with $90 billion in a single month of trading volume, even though it's illegal there since 2021. And basically, this is just Binance's business plan. What do you think? Bookings at today and web3.com. Should Binance capitulate, blocking all VPN access and making sure that people are restricted to the countries that they're from with the rules of the road of said country, or keep it open in the spirit of capitalism and free market? And finally, 6 companies have filed with the SEC for ETH futures-based ETFs. The first one happened on July 28th, and that was the Volatility Shares Ether Strategy ETF. And by August 1st, Bitwise, VanEck, Roundhill, ProShares, and Grayscale all filed ETH futures ETFs. Now here's the thing. There has been 10 futures ETH ETFs filed previously, and none of them made it to market. Well, I guess we're going to see if we break precedent in about 75 days. Why do I say 75 days? Because unlike spot ETFs, futures do not have to be approved. They have to be denied. Meaning, if they're not denied, that means they launch in 45 days from the filing date. That means this volatility shares will be first on October 12th, followed by Bitwise, VanEck, Roundhill, ProShares, and Grayscale. Now, let's get into those crypto prices.
Here comes the money.
Here we go. Money talk.
And the time is 9:40 a.m. Eastern Standard Time. We have the Fear Greed Index at 53. Bitcoin sitting at $29,369, up 1.7% in 24. Ethereum's at $1,850, up 1%. Tether's number 3. Binance is at 244, pretty much even. And XRP is number 5 at 69.1, up around 0.3%. Rounding off the top 10, we have USDC, Doge, Cardano, Solana, and Tron. The total market cap is sitting at 1.18 trillion, up 1.4%. We have a Bitcoin dominance of 48.5 and an ETH dominance of 19%. And that was our show today. I'll be back tomorrow. And until then, happy hodling, everyone.